Good morning and welcome to the Crypto Day morning. And today's date is Monday, day number 4 of June 2018. I'd like to welcome you to today's video. And like always, everything within your own risk, own reward for your investing decisions. In yesterday's video, I brought up these numbers 76 and 2/3 and 80.73, representing the 23.6% Fibonacci from the most recent low north of 7,000 and the most recent high south of 10. And it obviously has not yet made him run up to the 8,000. It is right now resisting the 76.67 area. It's got the 18 average, which is close to flattening, but the numbers are relatively flat on the lows, declining still on the highs, because if you make a move up to such a declining 18 average of highs, which you haven't been in quite some time, and you immediately pull back, that's not going to make it such flatten out. It's got to spend at least a couple days or have a very good breakout above to stop the decline on such the case. And on any event, when you see such a weak correction, just one of 23.6%, and then you see it starting to fail lower. The 18 lows is in at 74. You see weakness amongst there, 74 into the 73s. It makes it a very good, likely, probable move that it's going to break this low, making it to next key level. Next key level to me is previous low, as that would come in and around the 6,500 range. Of course, that can pierce down to about 6,000 within, of course, the low from February. As far as market cap is concerned, and before we do that, I'm just going to quickly just show the 1 hour term time frame. So any type of uptrends that have been drawn in have now been broken, as the 18 average after the decline at about midnight on today's date, Eastern time that would be, the price action resisted the level and then decent size move and just consolidating it now towards the 7,500. And as mentioned, within this price action, until I have a decent size break lower, which would basically be towards the 6,000s and lower, or this thing can get out of this movement, it's got a very neutral, choppy based, indecisive kind of market within traders. There's a lot of people, including myself, have a lot of uncertainty. Is this going to be translating into a bubble, like more longer term bear market situation, thus the lower prices, or is the correction coming to an end and thus basically 2017 all over again? Time, of course, for those type of questions will get answered in time. Now onto the market cap, and you can't see the right hand side, I'll fix that in a bit. But the low on April the 2nd is in at 243.56. Let's move this over so you can see the rest of it. And we have a high at 473.28. This is the April rally for the market cap. So for this rally to hold, it's basically got to correct and hold a 62% down correction. The price action on the late May levels brought the market cap down to 303 billion, which worked out to be that of a 67% down correction. A little bit more than the 61.8, but Pierce Extra, nothing wrong with that, because over the last few days we can see the rallying coming in. But the session over last night, a lot of markets been going down. It's at a critical point where if this thing rolls over, then all we would be looking at is a failed move from the May selling, and this entire rally in April would be that of a failed move for the entire more long-term situation. And again, these numbers are going to be all you're missing is the January 7th date for the text. Give me a second here. So we look at the long-term numbers. On January 14th, 2015, the market cap had a low of 3.3 billion, which is 100 plus times lower than today's number. At, well, almost 100. We're at 330 today. So we're above 330. So 100 times. But January, it was at 835, which means it's lost less than 3 times. You can see just by using that mathematics that it hasn't given quite as much back. And when we look at the current lows of 243.56 placed at the end of March, start of April, that currently represents a 22.77 price correction, appears above a 23.6. But I find that number very, very interesting, because when looking at Bitcoin, from its lows down in here, same time frame, it's managed to give back 23.6 and not 22.7. Well, that only tells me that since this market move has begun from the early January lows of 2015, that we have had altcoins marginally do better the entire run compared to Bitcoin. Thank you for tuning in. Have yourself a great day. Bye-bye. And just one more quick thing is, to me, this is just an obvious triangle. I'm just going to draw this in. Man, it's got to break this one time or one side or another. Have yourself a great day. Bye-bye.